Hey guys, and welcome back. In one of our last videos, we talked about oversold and overbought indicators like the stochastic RSI and the RSI, or the relative strength index. And what they do is they kind of let us know when something is too high or too low as far as the price of the stock goes. Now, that is just one way of calculating probabilistically when something is too high or too low. There is another semi-popular indicator. It's kind of losing its value. Not a lot of people give it as much attention anymore. But it is something that still people use today. As for me, I kind of still kind of go off and on with it. I use it for certain use case scenarios. So with that being said, we're going to be talking about the Bollinger Band indicator, and we'll talk about exactly why it's not it hasn't been the greatest indicator overall, but it does have its use cases. So let's just talk about it real quick. First, what the Bollinger Bands do is basically they just establish an acceptable range. So stocks tend to move within a certain range, and this range is determined in like, what do you call it, statistics, like two standard deviations, which is like where price should be 95% of the times. If the price is outside of this 95% range, that's called an outlier. So basically, the Bollinger Bands are really good at just indicating when something is an outlier, and that usually needs to shoot back inside the range. So it doesn't happen often because most of the time you can see that the stocks typically like to stay within the range. And in order to kind of see this better, I actually like to take off this basis, so this orange line, and I go ahead and just uncheck it right there. And I just watch right here to see whenever a stock is a little bit out of line. And so if you can see here, most of the time here, the price is kind of staying within line. So let's point out some of the more really obvious ones, mainly like this one, for example. The price range is somewhere around here, but obviously we had a really big gap down, and now the price is down here somewhere. This combining this idea of that of the Bollinger Band being like way out of whack, where the price is way out of whack with where the Bollinger Band is, and maybe combining this with a different indicator like a stochastic RSI is one of the best ways to probably use this indicator. Is again combining two different ideas or concepts together, confluence, to come up with the trading idea, right? So you can see here, anytime that the price does come out of range, like here, for example, it does tend to correct back in range. And if you kind of do enough of these analyses where you can kind of see where the price goes out of range and then goes back and then shoots back in range, usually what I would say is on average, you have maybe about a 2 to 3 day window. So from when you enter in, and you probably make a profit from that. It just doesn't happen that often. Whenever it happens. But here's the other thing too: is that one of the things you need to watch out for in this indicator is that even though you can see when price does, for example, come up and it's too high, and even though we do have, for example, the stochastic RSI telling us it's oversold and needs to come down, what this can do is they can actually consolidate or go sideways. And by going sideways, that basically allows this range, the top of the Bollinger Band, to keep extending up. And eventually, look here, after the next 2 or 3 days, now it's back inside of this range. Whereas this price here wasn't acceptable here on on March 23, 2022. When the price was here, it was unacceptable for that day, but because it went consolidated for 2 more days, the Bollinger Bands essentially caught up to it and made it acceptable again. So it's something to watch out for. These Bollinger Bands usually are best done for quicker type trades. And you can see here, as soon as you, for example, you hit here probably in the morning, it pops up for a good maybe 2 to 5 days is typically that the price opportunity for stuff like this. And here I'm looking at the daily chart, so just keep in mind the time frames of when you do this. And in general, what I find best is maybe the 1 hour chart or the daily chart is best when you use this indicator. And like I said, I don't use this that often, but when you use this idea and you combine it with other indicators, this could be a very useful indicator for you. So who knows? Play around with it. Tell us what you think. And with that being said, we'll see you guys in the next video.